What is going on, everyone? I hope you are all having a fantastic day. So I've covered a few different investing platforms here on the channel, but I still get questions all the time about which platform is best. But the truth is, there isn't a one-size-fits-all answer. So today I want to take a step back and talk about how you can find the perfect investing platform for you and your financial goals. So let's break down the exact 5-step process that I used to find the perfect investing platform for me, and that I continue to use to make sure that I'm not missing out on a new platform that might help me reach my financial goals even faster. All right, let's jump right into it. So it seems like every day there are new investing platforms popping up on the market, and especially in an age when you can buy and sell stocks and other assets right from your smartphone, investing has never been as accessible to everyday people like you and me. But that means that picking the right investing platform for you can be a little bit more difficult because there are so many options. So the first thing that you need to do, and step number 1 in our process, is figuring out what your goals are as an investor. And once you do that, you're able to prioritize those needs and goals when looking at the various platforms that are available. For example, if you are an active investor, meaning you want to be able to buy and sell stocks and other assets at a rapid pace, then the platform that is right for you is probably going to look very different than a passive investor who wants everything to be automatic and they just put their money in the portfolio and don't really make a whole lot of changes very often. These are two very different approaches to investing, and that's not to say that one is right or wrong, but your choice of investing platform or brokerage is going to be very important depending on how you approach your investing. Obviously, a platform like Acorns is not going to allow you to day trade Bitcoin, for example, but Robinhood might not be the right option if you want to buy assets other than stocks like mutual funds or bonds. So by figuring out whether you are an active or passive investor, and it's okay to be a little bit of both like myself, you can determine what your goals are as an investor, and then you can use that knowledge to make the right decisions on what platform is best for you. And this can also work in the opposite direction. Sometimes you might need to solidify your goals and then decide if active or passive investing is the right path. So ask yourself, are you trying to see rapid growth pretty quickly, or are you looking for a long-term consistent portfolio that is going to allow you to reap those benefits decades from now? If you're trying to create a form of income for the near future, then you're probably going to need a platform that allows you to more actively trade your assets, especially if you don't have a whole lot of capital to invest with currently. But if you're more concerned about sustainable long-term profits, but don't really want to have to constantly monitor your investment portfolio, then you're going to want a platform that gives you access to something like index funds or mutual funds, and maybe even something that is fully automated like a robo-investor such as Acorns or Wealthfront. So once you've narrowed down your goals and style of investing, you can move on to the second step, which is researching viable options that match your goals. For example, if you are taking a more active approach to your investing, then you're probably going to find platforms like Webull, Robinhood, or even something like TD Ameritrade's Thinkorswim platform is probably the best option for you. On the other hand, if you're looking for that hands-off passive approach, then something like Acorns, Wealthfront, or Stash is probably going to be a better option. And again, it's okay to be somewhere in the middle, because you might want to have a passive approach to your investing, but not in the sense that a financial professional or computer software is literally doing all of the trading for you. But that's honestly just whatever your preference is, and it's entirely up to you and what you think is best. So take some time and do some in-depth research into the various options that meet your goals that you identified earlier in the steps, and then try to slim down those options to 2 or 3 finalists that you feel are going to be the best match for you. Then from there, you can move on to step 3, which I call the testing phase. Now, in my opinion, the only way to truly know if you are using the best platform for you is to actually try out multiple platforms yourself. I understand that it might be a bit of a hassle to open multiple investment accounts, but that's why you did the previous steps, so that you could narrow down these options to 2 or 3 viable brokers that should meet your needs best. And in my opinion, opening 2 or 3 accounts just to make sure that you are using the best one possible for you is not that big of a hassle, especially considering a lot of these companies offer different sign-up bonuses and rewards when you open an account with them. Some platforms like Robinhood or Webull will give you a free stock that's usually worth a few bucks. SoFi will give you $50 worth of a stock of your choice, and other platforms platforms like Wealthfront will reduce your management fee all the way down to 0% on your first $5,000 of investments. So at the end of the day, opening 2 or 3 accounts is going to allow you to truly know what platform works best for you and your financial goals. But on top of that, you're also going to get some free stocks and other great benefits just for opening these accounts. Then after testing them out for a few months or so, you should have a really good idea of what features are most important to you and what platform best fits your goals as an investor. And that actually brings us to the 4th step, which is deciding what platform works best for you. Now, I know this might sound like a very obvious step, but I did want to put this on its own because this entire process boils down to this very step, which is deciding on the right platform. Ultimately, the goal of going through this entire process is figuring out and deciding which platform is best for you. So it's important to take time to research and test things out, but more importantly, you have to take time to reflect on your experiences with each of these platforms so that you can make the best decision possible. Now, once you've done these 4 steps, you might think that you are done, and you are, at least for the time being. But the 5th and final step that is absolutely crucial for long-term success is reevaluating the platform that you are using and seeing if there are any better options on the market that might pop up in the future. I know it might sound like a huge hassle, but like I said, there are constantly different investing brokerages and platforms popping up on the market, and there is no shame in switching to a new investing platform that you may feel is a better fit for you. Personally, I have used TD Ameritrade, Charles Schwab, Robinhood, Webull, SoFi, Acorns, Personal Capital, and most recently, Wealthfront. And while that might sound absolutely ridiculous that I have moved my money around so often, at least I know that I am using the best investing platform for my personal financial goals. And also, you're able to transfer assets into another account without even having to sell or repurchase them. And I promise the process is not that difficult, especially if you're going to get a huge benefit out of changing platforms. So every couple of years, just reevaluate your situation as an investor and see if there are any better options on the market that have recently popped up, or if you are still using the best option for you. Okay, so I know it's probably a little bit odd that I made an entire video just about picking the right investing platform because it's definitely a pretty niche topic, but as you probably know, investing is one of, if not the most important step when it comes to long-term financial success. So choosing the right account that is best for you and is going to help you achieve your financial goals in the long term is a big decision that warrants a lot of research and planning. Now, with that in mind, I do want to again reiterate the fact that you can and likely will change brokerages at some point in your life. With so many different options to choose from, it's not very common anymore for someone to open an investing account in their 20s, for example, and use that account throughout their entire investing lifetime. Goals change, companies change, and the features that are most important to you are probably going to change as well. So while this may feel like a huge decision to you, just remember that you can always try something else in the future. So I hope this 5-step process is helpful to you in researching and picking the perfect investing platform for your financial goals, but I'm sure that some of you think there are tips or steps that I left off of this list, so be sure to let me know what method you use to select your current investing platform down in the comment section below. And I'd also love to hear what your favorite investing platform is, because while it used to be a lot more simple with a few key players in the industry, there are probably several hundred investing platforms at this point that all offer some really unique features. So I'd love to hear what your favorite investing platform is and why you love that platform so much. And if you do want to try out some of the investing platforms that I mentioned in today's video and get some of those free stocks and benefits, then there are some links down in the description below that will allow you to get those free benefits when you try out these accounts. As always, if you did get value out of this content, it would mean a lot to me if you would hit the like button, subscribe to the channel, and share this video with someone who you think would get value out of this content as well. And as always, thank you so much for your time. I seriously do appreciate you taking time out of your day to watch my video. As always, take it easy, and I'll see you in the next one.